Welcome to Becoming Boss C. Today's lesson focuses on Domain 2, Independence and Objectivity of the Certified Internal Auditor Exam, Part 1. These are the syllabus requirements for the second domain of the CIA exam, Part 1, and the related cognitive learning levels. A and B are tested at the basic level, and C and D are tested at the proficient level, which means the Institute of Internal Auditors expects you to have a more detailed and thorough knowledge of C and D. Today, we will discuss objectivity, which relates to C and D of the syllabus objectives. A. Interpret organizational independence of the internal audit activity. B. Identify whether the internal audit activity has any impairments to independence. C. Assess and maintain an individual internal auditor's objectivity, including determining whether an individual internal auditor has any impairments to his or her objectivity. D. Analyze policies that promote objectivity. Let's discuss objectivity. What is it? Objectivity is defined as maintaining an attitude of impartiality, having intellectual honesty, and being free from conflicts of interest. Maintaining an objective mindset requires a continuous assessment of auditors' relationships with audit clients and other stakeholders. As you can see, independence and objectivity closely relate to each other. If independence is impaired, then an internal auditor's level of objectivity may be limited, and their state of mind may become subjective rather than objective. An internal auditor's objectivity means performing job duties and assignments without bias and external interference. So, now you know what objectivity means. It's time to discuss factors threatening objectivity and factors supporting objectivity. Threats to objectivity are circumstances that make it difficult for or inhibit internal auditors from applying objectivity to their day-to-day audit activities. In order to be objective, internal auditors should avoid conflict of interest situations, meaning that they should not participate in activities where competing professional or personal interests exist, because this can make it hard for auditors to fulfill duties without bias. Another threat to objectivity is the mirror imaging trap. This is a situation where auditors believe that everyone else shares or mirrors the same thoughts and beliefs as them. This limits their objectivity because they do not consider other views, possibilities, or perspectives that could enhance their audit work. To avoid mirror imaging, internal audit departments can have peer reviews from different people from various backgrounds to ensure that all possibilities and options have been considered. Target fixation trap is where auditors fixate or concentrate or focus on evidence that is consistent with their preconceptions and ignore other relevant views, perspectives, or contradictory evidence. They focus so much on one outcome or one piece of support that they lose sight of the bigger picture and overall objectives of the audit activity. Analogy trap arises when auditors use incorrect or inappropriate analogies that do not fit the existing situation. For example, comparing a company's expansion opportunities in the United States to their opportunities in Tanzania, Africa, may be totally different. The amount of capital investment required to start up may be higher in Tanzania. The barriers to entry for that industry may be lower in the U.S., and the government regulations and policies may be more difficult in the U.S. compared to Tanzania. So, making an analogy about expansion between those two countries could be incorrect. The projection trap occurs when auditors conduct performance appraisals for their employees. The halo error occurs when an auditor projects one amazing or successful instance of performance onto the employee's entire performance history, resulting in an overrated and higher performance rating. The horn error occurs when an auditor projects one terrible or unsuccessful instance of performance onto the employee's entire performance history, resulting in an underrated or lower performance rating. For example, if Adam has been a low performer consistently for the first 3 quarters of the fiscal year, but he conducts an amazing presentation or a meeting in December and shows his detailed knowledge of his audit, his supervisor may be so impressed that she gives him a superior rating for the entire year. That is an example of the halo projection trap. Adam's performance rating probably should have been lower. The stereotyping trap results from maintaining the status quo. In other words, doing or saying what has always been done, not taking any risks or making any creative changes. For example, the auditor may be biased when considering if a new audit methodology should be implemented. Let's say that the Institute of Internal Auditors provides a recommended activity or procedure for internal auditors to perform. The auditor may think that the way her department conducts audits now is just fine and nothing needs to change. It has always been this way and it should not change. That is the stereotyping trap. Finally, the stovepiping trap is where the internal auditor only acknowledges one source of knowledge or one expert opinion as the official source of truth and disregards all other sources of knowledge. This is also called the silo or legacy trap because the auditor is stuck in an isolated way of thinking that no other sources can be better or accurate. There are so many potential threats to objectivity for auditors. Let's go through a list of examples. Encountering work pressures from supervisors to produce multiple major audit findings in a short period of time could be a threat to objectivity. Personal and professional conflict of interest situations could lead to impairment of objectivity. Being financially invested in the company or the organization they audit, so they do not publish all significant audit findings, could lead to independence impairment. Groupthink behavior from the audit team, which leads the auditor to not mention new ideas or new information that could improve the audit, is a threat to objectivity. Being a close friend or close relative of the audit client could impair objectivity. Experiencing pressure from audit clients to ignore suspicious business practices or issues could also impair objectivity. Remember, threats to independence also apply to objectivity because a lack of independence may lead to a lack of objectivity. So the self-interest threat, bias threat, familiarity threat, undue influence threat, management participation threat, self-review threat, and structural threat, which we discussed in detail in the previous lesson, also could impair or could also be threats to objectivity. As you can see from the various threats mentioned, there are multiple factors that could cause an internal auditor to not perform audit activities with an objective mentality. Now, let's see what circumstances can support objectivity. When an internal auditor is unbiased and works independently, such as not taking on management's duties and not performing the role of their audit client, he or she is being objective. Continuous supervision of audits, performing quality assurance reviews, and reviewing audit work support objectivity. This is similar to the peer review we mentioned earlier, where someone at a different level reviews auditor's work. If the auditor does not consider other possible audit recommendations or misses key pieces of evidence, the reviewer can inform the auditor. When auditors use their best professional judgment and professional skepticism, This supports objectivity because they are not just believing everything they hear or see from the audit clients. They are verifying information from reliable and reputable sources and independently obtaining additional support. Ethical training for internal auditors, project rotations, and effective human resource policies for complying with objectivity rules also support objectivity because they inform auditors how they are expected to work ethically, and the project rotations allow auditors to maintain a healthy, unbiased attitude so they are not becoming too attached or close to their audit clients. There are plenty other circumstances that support objectivity. Can you think of any? If so, comment a few below in the comment section. Independence versus objectivity. I want to briefly compare independence and objectivity. These concepts are related, but are different because someone can be objective but not be independent. Independence originates from the organizational placement and assigned responsibilities of the internal audit function. When internal auditors manage other non-audit functions, such as supply chains or payroll, that does not foster an independent situation. Independence is achieved when the appropriate reporting lines, hierarchy levels, professional policies, and office culture are in effect. Objectivity is concerned with the mindset of internal auditors when they perform procedures, interact with audit clients, and draw audit conclusions. When an internal auditor is not objective, they may react based only on their emotions, their personal beliefs, and insufficient evidence. So, in summary, independence is about the business environment and conditions that allow internal auditors to perform their work, while objectivity is about maintaining an unbiased mental attitude when conducting audits or consulting engagements. What can organizations do to promote objectivity? Well, they can create internal policies such as a code of ethics. They can develop fair salary and bonus policies that support objectivity. They can mandate that auditors cannot audit areas when they have previously managed that area, and more. If you are still here, be sure to subscribe to the channel for more important information. Also, go ahead and click the like button if you are enjoying this lesson. I have an exciting update to the channel. You can now become a channel member by clicking the join button below. Next, we will answer practice questions. You can pause the video in between questions if you need more time to contemplate the answer. Number 1, a peer review can help in mitigating which of the following threats to an auditor's objectivity? A, analogy trap, B, projection trap, C, target fixation trap, D, mirror imaging trap. A peer review can help in mitigating which of the following threats to an auditor's objectivity? The answer is D. Mirror imaging trap is correct. The mirror imaging trap is an auditor's false assumption that everyone else thinks exactly how they think or shares the same beliefs. They are unwilling to consider or analyze other viewpoints of the topic being discussed. Number 2. The silo trap or legacy trap, which is a threat to an internal auditor's objectivity, belongs to the A, stereotyping trap, B, stovepiping trap, C, culture trap, or D, conflicts of interest trap. The silo trap or legacy trap, which is a threat to an auditor's objectivity, belongs to which of the following? The answer is B, stovepiping trap. The stovepiping trap means acknowledging only one knowledge source as the official source of truth and ignoring all other contradictory pieces of evidence or reliable and other reputable sources. Number 3. In which of the following situations does the auditor potentially lack objectivity? A, An auditor recommends standards of control for a contract with a service organization for payroll processing. B, a payroll accounting employee assists an auditor in verifying physical inventory counts. C, a former purchasing agent performs an internal control review over purchasing activities 4 months after being transferred to the internal auditing department. Or D, an auditor reviews the procedures for a new electronic data interchange connection to a major customer prior to implementation. In which of the following situations does the auditor lack objectivity? Let's discuss each scenario. So we're looking for a situation that does not exhibit an auditor's objectivity, hence the word lack being used in the question. In option A, the auditor is making a recommendation and is not taking on the role of management. This is still an example of objectivity. In B, a non-auditor is helping an auditor verify physical count amounts. The non-auditor is not performing the auditor's work. Rather, they are simply assisting, so objectivity here is not being impaired. In option C, we have an example of a previous employment threat, which we discussed in the last lesson. The auditor was previously working as a purchasing agent and is now reviewing purchasing activities only 4 months after being an internal auditor. This does not exhibit objectivity because the IIA standards say that a person should wait a reasonable period of time before reviewing employment areas that they previously worked in. 4 months is way too soon and is not reasonable. In option D, an auditor is reviewing procedures before a major system implementation. This aligns with auditors' responsibilities when performing an audit or consulting engagement. So, this does not present a threat to objectivity. Therefore, the answer is C. Number 4. According to the Institute of Internal Auditor Standard 1130, impairment to independence or objectivity, which of the following is not a part of functional reporting to the Board of Directors? A, audit plan, B, audit budgets, C, audit charter, D, audit risk assessment. Which of the following is not a part of functional reporting to the Board of Directors? The Chief Audit Executive reports functionally to the Board of Directors and administratively to the CEO, or Chief Executive Officer. The question asks, which of the following is not a part of functional reporting to the Board of Directors? Functional reporting to the board generally involves the Board of Directors approving the internal audit charter, approving the internal audit risk assessment, and the audit plan for the fiscal quarter or year. Administrative reporting facilitates the day-to-day operations of the internal audit function and typically involves audit budgets. Therefore, the answer is B, audit budgets. Wow, there was a lot to explore in this lesson. If you enjoyed the lesson, subscribe to the channel to receive notifications about new videos and like the video as well. If you made it this far, comment objective in the comment section. That will show me that you watched until the end. Type objective below in the comment section. There are other ways to support the channel. Look in the description box below. Also, I have an announcement. I will try to go live at least one Sunday a month, so watch out for those scheduled live streams on YouTube. Of course, consider becoming a member of the channel by clicking the join button below. You can join one of the 3 membership tiers: Bossy Crew, Bossy Elite, or Bossy Supreme. The most affordable option, Bossy Crew, has amazing perks such as getting a special loyalty badge to acknowledge that you are a member whenever you comment on videos or comment during live streams. As always, stay blessed and stay Boss C.